The stock of RZLV AI PLC, ticker RZLV, is currently trading in the pre-market session at approximately $3.32, marking a move of roughly 10.30% to the upside from yesterday's close of $3.01 on the Nasdaq. This significant pre-market gap-up is immediately the most compelling detail, and it completely contradicts the prevailing narrative that this AI-focused commerce firm is destined for a continuous downtrend after a massive drop from its 52-week high of $8.45. The expectation in the retail trading community, especially those following the steep decline, was for either consolidation or further capitulation, yet we see institutional interest pushing the price aggressively higher before the bell even rings. This movement is a direct signal that sophisticated capital is focusing on something beneath the surface that the average investor might have missed in the recent noise of general market weakness and the ongoing financial stress reports surrounding the company. This unexpected strength compels us to look beyond the surface level of the recent price action and financial headlines. The common ground understanding for RZLV right now is one of high risk, high reward. On one side, you have the ambitious projections, a raised annual recurring revenue or ARR guidance of $150 million for 2025, and a target of $500 million ARR exit rate by the first half of 2026, accompanied by major partnerships with Microsoft and Google. The company is painting a picture of a category leader in what they term agentic commerce, essentially autonomous AI systems handling commerce transactions. This bullish narrative is supported by a few key institutional filings, noting an increase in positions from major players like Alaska Investment Group and Citadel Advisors, which is a powerful vote of confidence. However, the reality, the counterpoint that challenges this belief, is the company's financial structure. RZLV has faced legal action alleging overstatement of revenue and AI capabilities, coupled with genuine financial strain, including negative shareholder equity, a massive debt-to-asset ratio, and persistent cash burn. The stock's dramatic volatility, falling nearly 65% from its highs, only to see analysts maintain high price targets like $10.79, creates a profound tension between future potential and immediate financial risk. The sudden pre-market surge today suggests that for the moment, the market is choosing to prioritize the ambitious future potential and the recent positive news flow over the very real immediate liquidity concerns. Looking closely at the recent stock movement, the past month has been a textbook example of high volatility in a stock with a low float and significant retail attention. The price has been whipsawed by a combination of positive announcements and the resulting short seller activity. For example, recent news of securing $200 million in financing and the strategic appointment of a former Microsoft executive to lead U.S. sales expansion was met with an initial pop, but that rally was quickly sold into. The daily swings have been substantial, often hitting a 5 to 10% range. Trading volumes, which have averaged around 20 million over the past 30 days, are unusually high for a company of this market capitalization, a clear sign of both institutional entry and active retail trading. The institutional activity disclosed in the latest 13F filings, though lagging, shows that large institutions have been quietly building positions. This accumulation, even in the face of ongoing price depreciation, is a key component to today's upside movement, as it indicates a calculated long-term view that outweighs the short-term negative headlines and financial metrics. The sector momentum for AI infrastructure remains strongly positive, but RZLV's micro-cap nature means it often trades divorced from its peers, reacting violently to company-specific news, both good and bad, which is exactly the pattern we are observing. The core business of RZLV AI PLC is providing generative AI solutions for the retail and e-commerce sectors, primarily in the United Kingdom and the United States. Their main platform, the Brain Suite, includes Brain Commerce, which utilizes a proprietary large language model called Brain Power to provide conversational and visual product discovery, aiming to replace traditional site search and significantly boost conversion rates and average order values. They also have Brain Checkout, which offers an instant one-tap checkout, even supporting crypto to fiat payments. The idea is to create a seamless AI-driven shopping experience across any device or channel for major enterprise retailers. Their strategy has been one of aggressive growth by acquisition, such as the purchases of SmartPay and Subsequent to build out their payments and data infrastructure, which explains the high cash burn rate visible in their older reports. The historical data shows a company in a rapid scaling phase, with massive year-over-year revenue growth, over 426% in the first half of 2025, according to one report, but still deeply unprofitable, posting a significant adjusted EBITDA loss. The challenge is converting that staggering percentage growth and the reported $50 billion gross merchandise value processed through their platform into sustainable, positive operating cash flow, which is the crux of the market's current anxiety. This brings us directly to the short-selling awareness and the forces of market friction at play. RZLV is clearly under significant short-seller pressure. The most recent short interest figures from the middle of last month show over 12 million shares held short, which represents approximately 10.26% of the stock's float. Crucially, the days-to-cover ratio is extremely low, sitting at about 1 day. While a high short interest percentage suggests conviction from bears, the low days to cover indicates that if a sudden surge like today's pre-market move were to accelerate, the short positions could cover relatively quickly without causing a protracted parabolic short squeeze. Short borrow rights, which tell us how expensive it is for short sellers to hold their positions, have been noted in the 6% range recently, which isn't excessively high, but is a cost that adds pressure. The short thesis, which we have seen heavily debated across platforms like X and investor forums, centers on the skepticism around the company's financial viability, the aggressive valuation multiples in the face of deep losses, and allegations of exaggerated technology claims, notably referenced in a recent legal filing. Some investors on social media forums are openly calling for transparency, demanding a clear response to the legal allegations and the persistent negative cash flow. This is a realistic demand that the company needs to address head-on. But coordinated short attacks are much harder to prove and are often more of a narrative than a provable fact. What investors can take from this is an actionable insight. Monitor the fails-to-deliver data, which, while not a perfect measure, can sometimes flag settlement issues and unusual trading patterns. More importantly, keep a close watch on the next short interest report and the option open interest. A spike in call options, coupled with a steady or increasing short interest, would be a much stronger signal for potential volatility than short interest alone. What's your take on the rising short interest? Smart money making a skeptical bet, or an overextension of bearish sentiment? Comment below with your perspective and tell us what metrics you're tracking to assess the risk. Moving forward, the future outlook for RZLV AI PLC hinges on execution and liquidity management. The most immediate catalyst is the proper deployment of the recently announced $200 million in financing. If this capital is used effectively to scale the sales team, as the former Microsoft executive appointment suggests, and secure large recurring contracts, it could fundamentally alter the market's perception of risk. The expected massive growth in revenue and EPS forecasted by analysts, with a consensus target around $10.79, is built on the belief that RZLV will be a leader in a massive high-growth AI subsector. The risks are plain: failure to rapidly convert gross merchandise value into profitable net revenue, or a failure to successfully rebut the recent legal and financial allegations. The tension here is that the market's expectation of a multi-bagger stock in the AI space is high, but the reality of the balance sheet demands near-perfect operational execution. Any misstep will be severely punished, especially with short sellers already circling. The opportunity is that if RZLV can bridge that gap, if the new contracts and the $200 million in capital lead to a clearly defined imminent path to profitability, the stock will have the necessary fuel to close the massive difference between its current price and the analyst consensus. For now, the pre-market action gives the bulls a much-needed morale boost, but the true test begins once the market opens and we see if that buying power has legs or if it's simply a small opportunistic squeeze. The narrative has shifted slightly this morning, pushing the expectation of future growth to the forefront. But investors must remain hyper-aware of the financial reality that will ultimately determine the company's long-term stock performance. Comment below how many shares of RZLV AI PLC you currently hold, or if this stock is simply too speculative for your portfolio. We are watching for sustained volume and a hold above the $3.20 level throughout the day to confirm a deeper reversal in sentiment. The central insight remains that the market is grappling with a disconnect, the promise of a category-defining AI solution with explosive growth potential versus a balance sheet that signals high operational risk and financial pressure. Today's early move suggests, perhaps temporarily, that expectation is winning the fight against reality.